This is Scott Becker with the Becker Private Equity and Business Podcast. Today's discussion is 5 questions. Should you invest in private equity? So today's discussion is exactly that. It's 5 questions you should consider as you think about investing in private equity. When people first have some amount of money, they sometimes think that private equity or venture capital is the holy grail, that if they could just be that kind of investor, they'll have won the lottery. And what you find over time is not necessarily that that's the truth. So here are 5 questions to sort of address when you think about whether you should be an investor in private equity and private equity funds. The first one is, have you done a serious analysis and conviction to the space, to the area around investing in private equity, alternative assets, or venture capital? Have you really thought about what are the returns here versus the returns you can get as a public market investor in an S&P index? Have you really understood and thought about the cost-benefit analysis of the asset class versus other asset classes? Because ultimately, you don't want to do it unless there's a reason for doing so, unless there's a certain amount of higher return on it versus what you can get elsewhere for your investment dollars, and understand the cost-benefit analysis to it. When you invest in private equity, you give up you pay higher expenses than you do if you invest, let's say, in an index fund. And there's other costs and benefits as well. You can't touch your money for a prolonged period of time, which is different than owning public interest in a public entity or index fund or something like that, where you could access it at all times. So the first question is, have you done a serious conviction analysis as to why you're convicted to the asset class and why you want to invest in the asset class? The second thing is, and it goes with this, is have you seriously studied returns of the private equity class versus the public markets to understand the cost and benefits of one versus the other? The third issue, it ties a little bit to these, but it's a little bit different, is are you liquid enough outside of these investments so that these investments which are illiquid, if you have plenty of money outside these investments, so whatever you put here doesn't put you in harm's way if at some point you need money, you need cash, you need liquidity, because these are generally illiquid investments. So are you liquid enough outside of these investments? The fourth question is, if you decide to invest in private equity, the thing that you also have to understand, private equity is not a single class with a single set of returns. Rather, it's a very, very broad continuum of who performs well in the asset class. Some players perform extremely well, some don't. Some that perform well last year don't perform well the next year. And how have you studied who you're going to invest in on the private equity side? Are you going to have enough different funds that you're invested in that you get something closer to what the average returns are that you're expecting? Or have you really thought about the funds you're investing with, and will they let you invest, that you're really convinced that they're going to outperform the public markets or whatever your alternative asset choices are? So I think that's the fourth thing, is who are you going to invest with, and sort of, are you comfortable with it? The fifth point is, do you have a core investment strategy outside of private equity, and where does this fit in? So for me, the core of my investment portfolio might be S&P index funds and treasury bonds, and then I've got some dabbling in several different private equity investments and private equity, in private companies. But the core of my investment, I know very clearly that the core of my investment is the S&Ps and the treasuries. And then if I want to, I don't want to say gamble, or if I want to work with private equity, I'm obviously not a sophisticated, deep investor where I'm going to put 20% of my portfolio in private equity. An investor is really convinced that the returns are going to be better, might very well do so. For me, the alpha, the delta between private equity returns and public market returns is such that I'm going to put a small portion of my overall portfolio in it, not a huge amount, but a more sophisticated investor might, quite frankly, think differently. But you have to understand, what is your core investment strategy? For me, it's largely S&Ps and treasuries, and whatever allocation makes me comfortable, and then exploring some private equity investments. But anyways, the theme of the day is, should you be a private equity investor? 5 different sort of questions. First is, do you have a true conviction around the space? Have you studied it to understand what you're likely to get out of investing in the space? Second is, what are the returns in the space versus public market returns? Third is, are you liquid enough outside of your investments in private equity? Fourth is, who you invest with. And there's a huge continuum of potential investments here, some of which are great, some of which are not great. And finally, fifth, do you have a core investment strategy to go with your investments in private equities? Those are our 5 questions. Thank you for listening to the Becker Private Equity Business Podcast. Thank you very much.